A couple of days ago, when there was a bloodbath on the street, on the markets, some of the people bought the dip, but some other investors really like, I don't know about this thing, let me pull my money out. So you were hearing a lot of bearish spread thought around what is actually going to happen on the markets. 20% correction, JP Morgan, 10% correction, Morgan Stanley. Markets are way inflated, and we've been hearing this since November, December of last year. So it's not something new about some people, some experts thinking that the stocks are highly inflated. But when you look at actually what happened today and yesterday, it seems like the market is really rebounding. We had more than 1% back-to-back days following the debacle that we observed last week. Why? Because those risks that were causing people to be fearful and remove money out of the market, it's now cleared, so they have much more confidence into putting money into the market again and taking some risk to get some good reward. Why? Because interest rates are so low now that when you really look at anywhere where you can get your money to work for you, well, I don't really see much places. Money market, it's like, interest rates are between 0 to 0.25%. It means if you put $10,000 in a savings account or even a high yield savings account, by the end of next year, in the next 12 months, you will be lucky if you get $25. $25 out of 10,000, just to tell you how low interest rates are. A couple of years ago, in 2019, it was $250. You could expect to have up to $250, just to tell you the difference. They have been slashed. So if you really want the money to work for you, the stock market is really where to put it. Let's people have crypto in mind because it's kind of new and sophisticated a little bit and highly volatile. So people will avoid to put their money into crypto, and stocks is really what I see now. The question is, when interest rates rise, starting by the end of this year, there's going to be a shift into some of the pockets or some of the sectors in the market. And all of the sectors will not react the same way because of the nature of the business in those sectors. And that's why if you want to make as much money as possible, like doubling or even tripling your money, I'm going to share with you in this video the best sector that I see personally and where I have my money invested, in where you can still double and even triple your money if you start putting your eggs now. So let's get after it immediately. What am I referring to? Well, first of all, before getting into that, let's see sector by sector performance on the stock market today and the 1 year percentage change. As you can see today, the two main gainers were energy and financials. As I mentioned in my post-market analysis today, these were really the sectors where we have the stocks driving the markets higher. If you look at the 1%, the 1 year percentage change, energy is up 53%, financials up 55%, and it's really the two that are kind of popping out. Now, consumer discretionary, 26%, not bad. Communication, 43%, not bad. Healthcare, 27%, industrial, 30%, IT, 37%, materials, 26%, and real estate, 36%. Well, real estate is really something I don't want to focus in this video because it is really, the circumstances and the parameters of that market, it's really like crazy for now, okay? So let's move on. Another sector by sector performance. This is from Bloomberg as per today only. Again, top leaders, energy and financials, and then you have the industrials and the materials. The fact that these four are leading today, which is a kind of a rebounding trade based on what we saw last week and the week before, and given the fact that September, it's a red day historically for the markets, it tells you that cyclicals are now trending to be where smart money is being invested. If you look also at this other comparison, it gives you even more clue to what is actually, is going to be the best sector to invest your money now going into 2022. And look, today we already talked about this, but when you go back to the 3 last months and the 3 6 months, all the way up to the last 5 years, you can really see that there is only one negative. And that negative, it's the energy sector. Look, this is the XLE representing the energy sector in the S&P. On the last 5 days, it's been up 2%. On the last month, 4%. But if you really look at the last 6 months, it's kind of on the downtrend and coming back, but still up 3%. And year to date, 33%. Now, what is really interesting is when you look and you zoom out a little bit on the 5 years, well, even though the point where the levels before the pandemic, if I'm really put here, this is January 3rd, right before the pandemic started, we are still below. We are still 16% below where it was. If you look at the XLF, for example, financials, on the last 5 years, look, from where it was standing back before the pandemic, we are up 22%. So it's kind of the same thing if you look at real estate, if you look at communication, if you look at technology, it's even higher. If you look at retail, it's even higher. So the fact that energy is still lagging tells me that there is a catch-up trade to be made here. There is a gap fill to be made here. And that's why you are starting to see a comeback based on these reopening cyclicals. And people are starting to position themselves in order to not only ride the whole inflation thing, because historically, oil and energy has proven to be the best hedge. Stocks are the best hedge sector against inflation. So if you want to still double your money, this is an example of one of the small cap into the energy sector. Today gained 7.7%. If you look at where it was 5 years ago, before the pandemic, it was at 48. So even though at some point in June, it went all the way up to $60 a share, it is still very below the pre-pandemic levels, down 16%. But at this point, like at $80 a share, oil was trading 50% below the prices we see today. So if you're producing oil and right now oil is higher, you're poised to make big free cash flow, big money for the investors. So that's why we can still be able to do, if you want to go back to where it was, where oil was trading at $70, based on where we are, this is a 50% upside. 50% upside. Now, with the capital discipline these guys are putting into, the book value of this company, for example, is well around the 120. So if I go back to where it is now, it is 68% upside. So guys, I don't know about you, but very, very few sectors will give you this kind of returns based on where we are currently and based on what is actually going to happen. So just to say, if you want to double your money, put it into energy, potentially on small mid cap.